you everyone for joining for today's webinar. As you would have seen, we're talking about something really important to all of us, insurance, and how that works and with all the different life stages that we go through. This webinar is one of the many that we've been doing in a series that really focuses on the 6 pillars that we have when we're considering advice for people's situation here at FMD Financial. For those of you who may not have seen the last couple of webinars, we've already covered off goal setting, income and budgeting, assets and wealth, superannuation, and now insurance. For those of you who may not know me, my name is Nicola Beswick. I'm a senior financial advisor here at FMD Financial. We were going to be joined today with Nick, but unfortunately he's had to be called away and is unable to attend today. So you'll be listening to my lovely Kiwi accent for the whole time that we're talking. So before we get started, a couple of really key housekeeping things. A copy of the session will be recorded and sent out to all the participants that registered. So please bear that in mind if you've got any questions and so forth. If you do have questions, you can ask them in the Q&A box. You can hopefully see that on your screen, and I'll have a look at them and answer anything that comes through at the end of the presentation. Again, if it's anything that's really specific to your needs, please reach out directly and we'll have someone contact you. If you do have technical difficulties, please just refresh the browser, so Chrome, Safari, and then reconnect. And finally, like we've done with the last couple of seminars, we've had a survey being sent out. So any feedback would be really appreciated because we do want to try and improve these over the journey that we hold. Finally, before we get started, one of the key things that I do have to make you aware of is anything in this presentation will be of general nature. So if you do have anything specific that's associated with your needs, please do reach out and an advisor will be able to contact you and talk through your specific situation. So insurance that fits your life stage. This is what we're going to be addressing today. And what we've done is looking at some really key parts here. We'll have a look at what's changed through the pandemic, then touch on types of insurance that exist, why it is important, and some of really the key mistakes that we see along the journey, as well as have some actual real life examples that people have been quite willing to share. We'll then summarise as to why you would like to get professional advice in this space. We know the last few months have also been really challenging with us from a COVID perspective. I know that's really highlighted the news of late. But one of the key things that we have been addressing through this series of webinars is what has changed through the pandemic, particularly in each of those goals or those sections that I talked about. The reality is there hasn't been a lot of change, particularly from the insurance space with the impact of COVID. We have seen a lot of things like increase of interest rates, the cost of living going up, and this real economic uncertainty happen. And when this does impact us and the people close to you, a lot of people do look at the reason why they may want to hold specific things, particularly if they're funding extra costs that may rise. Insurance is one of those. We see time and time again a lot of people questioning the premiums or the cost of paying an insurance policy. And that's really why running this session today is really important. It may not necessarily be important to all of you that are listening today, but certainly there'll be friends, family members where this will be something that they need to look at. One of the key things that we always say to people is, why do you have the insurance and why is this so important? It's a good question. Why do you want to hold insurance? Insurance is ultimately one of those love to hate costs that we have. We don't like paying it because we see it disappearing out of our bank account each month, each year. But the reality is it's important when you need it. Catch-22, we don't want to need it because of the type of cover that this has and the premiums that this pays for. But when we think about some of these very lovely wise words that this gentleman had, you have insurance not because you're going to die, but because you are going to live. Now, interestingly enough, this gentleman, and I've got to admit, a little bit of Google came into play with this. He was someone that was a doctor in South Africa, and one of his brother was one of those that performed the first successful heart transplant. What this gentleman saw was that a lot of his patients didn't necessarily pass away from the event of something quite significant, like a stroke, cancer, heart disease, but they continued on living. And so this is why he saw this as being something really important. It creates the ability for someone to continue to have financial independence when you need it the most. And the insurance covers that when something like a medical event happens to you. Now, the prevalence of various medical events is actually really quite staggering when you look at a number of statistics that are out there. This slide here essentially shows us a number of statistics dated back in February 2010. So it's quite outdated in terms of time. But if we look at some of these key things, I know that many of you there listening today will probably have someone that comes to mind. Now, when we look at something like 30% of people having strokes who are of working age, 65% of them have a disability that will impact their everyday life. And then under the age of 65 years, there are 2.6 million people living with a disability. And many of these will be too sick or underinsured to work, and that can impact them by the time that they reach that kind of nominal retirement age. So if something does happen to us in that situation, what are the options? We think about some of the key stats of people that don't necessarily have life insurance. We say here 92% of working people do have some kind of insurance, but only 42% of that population have enough insurance to be able to meet their needs or replace their same level of income should they be disabled or pass away. So to do this, what do people have, that remaining percentage that aren't adequately insured? Do they borrow money? Do they sell down assets or use the savings? A lot of this information isn't really the answer. So what is the answers that we've seen here in Australia? Which again, I find interesting as a Kiwi saying this, but we look at all the different types of solutions that exist around. We've got Medicare, we've got work cover in the different types of states and territories. Then we've got the National Disability Insurance Scheme, or the NDIS. These all give a little bit of different type of cover. But when we look at something like the NDIS, it is a good initiative, but it doesn't replace income that would be lost if someone has a disability that impacts them from work. This only really is the function to help with medical therapy and treatments. So this is where we need to look at the different types of insurances and why we have them. Whenever you're talking to people, and I'm sure for those of you that may be at a different point in time where you don't necessarily need these insurances, I'm sure you came across these. We've got, and I guess from a financial planning world, 4 key insurances that we look from a risk perspective that we talk to anyone regardless of their situation. The first is life, then total and permanent disability, trauma or what we call critical illness, and income protection insurance. As you could imagine, some of the definitions are actually quite interesting in terms of what they do. But when we look at life cover is one of those almost, well, it is black or white. It's a lump sum that gets paid out upon someone passing away, or if they have a terminal illness that will likely see them not live for a reduced period of time, like 12 months. Now, the reason people have this type of cover is to really look at paying out debts, helping fund the cost of dependence. So, for example, if you've got school-age children and they need to continue going to private school, then we've got that. If it's someone who was the working person in the household, you can get a decreased amount of cash flow, so replacing cash flow from that situation, to then also enable life to continue on somewhat of normality. But then what happens if you don't necessarily pass away and you're completely incapacitated and unable to work? This is when something like total and permanent disability cover comes in. So this is a situation where essentially you're unable to work. Something has completely happened in your life where you are permanently disabled and does impact your ability to carry on life as usual. So getting a lump sum payout that on these kind of events really does help, particularly when we look at situations, again, paying out debt, helping with paying the ongoing school fees, for example, for children, or being able to get a carer in to help with extra needs that may be there. Helping with the medical expenses, home modifications, and again, replacing that cash flow that someone has lost from an illness or disability that they've had. So very, very, very common, and what we usually see is total and permanent disability and life being held very similar in terms of amounts. Something that is also really important, and I know that this is something that is maybe in the back of a lot of people's minds, particularly now, is what if something happens where you're not completely incapacitated and you do have a short period of time to get back to work, or you're clearly still alive. Something like trauma insurance, also known as critical illness, is actually really quite important, because what it does is it gives you a lump sum payout upon a specific medical condition that you've suffered. So some of the key things, there's about 10 generally that people look at, or insurers have covered: cancer, heart attacks, some kind of major surgery, strokes, or other things like multiple sclerosis and so forth. So slight smaller lump sum that you can be paid out for to really help ease the burden from a loss of income over that short period of time, but then also help with medical expenses and so forth, particularly because we know that that can get quite overwhelming from a cost perspective. The other one, and the final one that I'll talk about, is what we call income protection cover. Now, this is probably one of my most discussed type of cover that I have with a lot of people, regardless of age, income, etc., because really what it does is it gives you essentially an income on a monthly basis when you're unable to work due to some kind of illness or injury. So if you think about something like, again, going back to the trauma, someone has a heart attack, you could get paid out for a period of time to help burden that cash flow ease. This is where income protection comes in. Income protection is linked somewhat to the amount of income you earn from employment. So the amounts can vary depending on how much you earn and so forth. It doesn't cover things like redundancy, unemployment. It is really to do with disability from working and unable to work. So in terms of the different types of when these insurances become really important, it all varies depending on your current life stage. So if we think about someone who may be younger, single, and not necessarily got a large amount of dependents or debt, the cover or the need could be very different compared to someone who is in the middle of their working life, got a mortgage that they have to pay, got kids going to school, or knowing that those education expenses are there. Very, very different type of things. So what the really important part is looking at your needs and the requirements at each of these key stages. So this chart gives us a really good general understanding or overview of what type of cover may be important when. And this is why having someone in your corner, so to speak, to listen to what you're talking about is important, to make sure you're not overinsured or underinsured. So life, we can see there on one of these key things. So hopefully you can see my mouse there. Life here, you can see, is really, really important when you're in this young family stage and got a large amount of debt, children, etc. But then tapers off as you get to retirement age and got a lot more stability and getting closer to the end from that earning capacity. Look at something like income protection, for example, very similar. We see people here in this stage are generally at their highest point of earning capacity, so have a need for a higher level of income. But also it's really important to start looking at protecting your income very early on, particularly because you'll be at a peak, let's make it a general assumption here, health, fitness here. So when the assessment's done, the underwriters are looking at your position on an ongoing basis from a health perspective as well as your income. So some really key things there to look at. When we think about this in those kind of key areas, when we go back to something like when you're just starting out and you've got no dependents, no real kind of financial burdens, you do want to make sure that you're not paying as much from a premium perspective, but you've got enough cover there just in case something does happen. So for example, if you're completely incapacitated and unable to work, you're still going to live for a substantial period of time. So you need to make sure that you've got that cover to help fund any of those expenses. Very similar to someone that has a family, costs can be quite high with everything that's going on in the household. And that really does impact what people may or may not decide to spend their money on. However, if you think about what would happen if something was to happen to maybe yourself or your partner and they're unable to work and generate an income, that can have a severely impact. Well, it can detrimentally impact you all as well. So making sure you've got that cover there in place is important. But then as life goes on and kids have left home and you don't necessarily have them, the mortgages come down, then making sure that you're not, you're still covered, but maybe got sufficient cover for everything is really important. And then particularly as we look at people in retirement, questioning the value of the insurance. Now, insurance is very much a personal thing because everyone has different opinions and thoughts. So it really is your decision and your partner's decision as to what you do. That's something that I think is really important whenever you're talking to someone, is just making sure that you've got that ability to have that confidence to say what you want to do. Now, this brings me to my favourite part of the presentation, is the 5 common mistakes that we see, and this is generally what I spend a lot of time talking to people about, particularly because people do have a different type of thought process around things. So, mistake, and I'm going to count backwards because I wanted to have a little bit of interest in what can be a very dry topic to talk about. So, mistake number 5, the wrong level of insurance. So, particularly people, for example, that may have a $500,000 mortgage, but only have life insurance for $100,000. There is a huge shortfall there. If something was to happen to someone and a partner had to keep the house but couldn't maintain that interest repayment, that could actually really severely impact someone's position in the future. So being covered for a lesser amount than what you really should, that is a key thing, particularly when you may be overinsured as well. So having more insurance and paying for those premiums when what you have. So if I reverse that figure, you've got life insurance for $500,000, but your mortgage is only $100,000. Clearly, there's a little bit of a difference there that may be worth consideration. The next one, so number 4, waiting until the right time. This is something that a lot of people kind of put off. I don't need it. It will be okay. And thinking we'll get it at a particular stage. One of the key things that happen when you go through an insurance application process is the underwriters look at your medical position at that point in time. So someone, for example, in their early 40s is probably going to have more health concerns than someone in their 20s or 30s. So advocating here for essentially considering the right insurance at the right time, particularly when it comes from that health perspective. What you want to do is be covered for the maximum amount of potential illnesses and trauma events that happen, and not have any medical exclusions on your policy. Number 3, and this is probably one of my favorites as well, is consolidating superannuation accounts without understanding the implications. Now, how does this relate to insurance? Essentially, a lot of people have insurance inbuilt within their superannuation accounts, and particularly when we've seen a lot of people having multiple superannuation accounts being opened, particularly because they're changing jobs and so forth, they'll automatically get insurance attached to that new superannuation account. So what we want to do is make sure that before someone actually combines all their super, because we do know that that's an ideal thing from a reducing costs, etc. perspective, making sure that you don't inadvertently cancel any insurance that could be of benefit down the track is a key thing. I've seen so many examples where people have had traumatic events where they could have claimed on like a TPD policy, for example, but not being able to do that because they went through this process of consolidating superannuation accounts and not realising until years down the track how much insurance that they did have within those other accounts. We also know the cheapest isn't necessarily the best either from any kind of perspective, and that is exactly the same when it comes to insurance. Insurance, and if we just think about home, car, contents insurance, I'm sure that when you've all looked at the different types of descriptions in terms of what's covered, what isn't, there are variations in the cheaper policies, compared to your more kind of premium policies. The same thing is exactly that with risk policies. When we look at total and permanent disability policies or policy documents, for example, they can have very different definitions and different types of cover. So generally, you want to make sure that you weigh up the pros and cons. Cheap might be good from just get it in and have it, but not necessarily cover you for all the potential things that could happen through someone's lifetime. Likewise, there are some really expensive policies out there that have so many different types of things that they cover, but are maybe unlikely events. So it's just getting that balance right and making sure that you're getting that comfort. Lastly, she'll be right. This is something that we're all guilty of. We're all thinking that there's not necessarily something that will happen to me or happen to someone else, and I don't need to worry about it. This is probably one of the worst mistakes that is out there. So many times people are not necessarily covered as much as they could be, don't necessarily have thought about it, and find themselves in a situation where they have to make decisions that they may not want to have made if they had had insurance in place. So, for example, if we think about that statistic right at the really start of the presentation, when we talked about how much cover people have and how many people are adequately covered, the things that people have to do, like sell assets, downsize, move in with parents, those kind of things, you don't want to do that. You want to try and maintain a sense of comfort. So this is why it's really important to look at these things. So this is all very well and good, but what about some of these ideas or theories in practice? What I've got is two very key examples that really do describe the importance of insurance. Now, these are real life examples, and you can actually go and look at them on the website that I've got there. And what this really does is highlight the importance of it. If we take Dexter here, for example, he was a fitness fanatic, I would say, loved exploring and was in IT. So, really active, probably very demanding job. But he, it says 2018, was recovering from a major heart attack. After doing this, was hit by a car near Bondi Beach. Now, not ideal. Unfortunately, having a heart attack, but then also being hit by a car as a cyclist isn't. I can't think of other things that I'd like to happen, but certainly, if we think about his journey, he and I'll read this out here, was severely damaged 3 out of his 4 limbs, plus his lower spine, hips, and pelvis. They told me I'll be in hospital for 12 weeks and that I wouldn't be able to move from the bed for 8 weeks. So that was the hardest bit. He was in a lot of pain, but also lost complete use of being able to do anything. Fortunately for Dexter, he had 2 insurance policies. He had the critical illness or trauma policy and an income protection policy. So he actually made a claim when he had his heart attack on that critical illness policy. So that gave him a lump sum to help him through the heart attack. But then the income protection kicked in when he had his cycling accident. So that, in brief, shows the really key parts of why it could be important. The second example I have is Scotty. Now, family man in his 40s, living in country New South Wales, diagnosed with bowel cancer, something that's, I know, quite a key thing for all of us. And he was fortunately listened to his financial advisor that had said to him, you need to make sure that you get your cover quite early on in your life. So when he was starting out with his wife and a young daughter, he signed up for life, total permanent disability, trauma, and income protection insurance. And so what that did when he was unfortunately diagnosed with bowel cancer meant that he could cover the costs of doing so. Interestingly enough, as I was reading through this case study, he quoted something like standard health insurance cover from your health insurance pays for some of the costs, but when you start looking at all the specialists you need to see, get the radiation, etc., the actual medical costs can add up. He even said at some stage he was taking 7 chemo pills a day, and each of those little boxes of pills cost him $1,000 each. So you think about that. So quite key examples and really give us an idea of when these insurances may be important. So let me recap on what I've just said. The key types of insurances that we talk about: income protection, trauma or critical illness, life insurance, and TPD, all benefit people in specific ways at different types of events. This slide here shows everything in such a nice, succinct way. It really does give you a snapshot as to when something may be important for yourself or whether it's a family member. Income protection, replacing your monthly income from essentially income. Critical illness, giving you a lump sum event upon a specific event happening. Life insurance, paying out when you pass away. And then TPD, which is probably one of your also key ones when something happens from a permanent disability perspective and unable to work ever again. This is why we're really important from a financial planning perspective. Our job is essentially to help coach clients to think about what they may need, what's important to them, and then making sure that they're covered at the right time for the right amount, whether that's getting more or considering the options around reducing if the situation warranted it. And most importantly, you're all comfortable with doing that. That's probably one of the biggest things here, is making sure that whatever you do, you're comfortable with. So I really would urge anyone to really think about this. I've in my time come across so many people that have benefited from having insurance. I'm not going to go into them today, countless examples of clients and family members where they've benefited from insurance. So it's really, really important that you take this into consideration for your situation. Thank you very much, everyone. I'll finish off the session now and have a lovely day. Please let us know if you have anything and we'll get in touch.